Hey guys, this weekly order block got triggered. That's this order block right here. Got triggered over here to the pit. ICT, Inner Circle Trader, was the originator of the order block strategy. And it's really interesting to see the strategy play out again and again in the Forex market. We're going to take a close look. This is the CAD Swiss currency pair. We're going to take a look how this weekly order block, can you see it's on the weekly chart, how this weekly order block played out when it was retested and how we could have got into this trade and made the profit therein. Let's run the intro. We'll be back on the other side. Let's find a trade, the series that gives you money-making trade ideas that work. In this video, we're going to look at the live charts for potential setups. We're using a simple strategy from our textbook, My Trendline Breakout Strategy, how you can make money trading Forex. The strategy has shown itself to be successful in a live trading account. We believe anyone can learn to apply this strategy and make money from home. Here's a disclaimer, it's required by law. Please subscribe and share as you see value. And remember, we enter all trades with risk. Let's get to it. Okay, guys, so here we are on the other side. Let's notice an order block is the down candle prior to the up move, or it's the up candle, or it's the up candle prior to the down move. And the idea is that once formed, price comes back to it. Once formed, price comes back to it, and then we'll get a movement. And order blocks are quite interesting because if you're in a bullish environment, then you're looking for the bullish order blocks. If you're in a bearish environment, then you're looking for the bearish order blocks. So let's dissect this trade. We was on the weekly time frame and we marked out the order block. So let's see what it looks like on the daily time frame. Okay, so we were on the weekly chart, hence weekly order block. Here on the daily, we see that here's the down candle and it's put as two, which obviously if you combine them, that would make one down candle. And notice over here that literally to the pit, price comes and tags the order block and then it runs off. Ooh, look at that, that's 113 pips. All right, brilliant. What do we notice? We're above the 200 period moving average on the daily chart. However, we're below the 200 period moving average on the 4-hour chart. Interesting. It's just an observation. Okay. So here's where it tagged in there. And yes, let me see if we do that. It makes somewhat of a channel and we draw it across to the other side. It seemed like price is in a channel coming down to that point. Another thing we look for, because if you've gone through the studies of ICT, you look for equal lows. So there, over here we have equal lows and it matches the equal lows that are over here. Interesting point. So that means stops were under here, and then that was the nearest order block. I don't know. We're speculating, but it seems like a plan. It seems like it worked. But let's get a bit more specific, because what we trade is we trade the trend line breakout strategy, don't we? And what we're noticing that here's a channel. We've talked about channels in the past. Chart patterns that you need to know. We did a video on it. And what we're seeing here is that here's a channel and price is going up and down, up and down, up and down in the channel. Nice little head and shoulder pattern there, and it goes up and breaks out of the channel. Back in, out. Anyway, price broke out the channel, didn't it? Okay. So how could we have traded that? Well, let's take a preview here. If we put our Fibonacci tool on this one here that broke out of the channel. Now, typically, our target, we have an entry that we like to take, first entry, second entry, and then we have our targets. That's how we like to trade. So if we anticipate a trade approaching, then we're going to prepare to enter the trade. And this is part of the preparation, okay? Let's just see how this trade panned out. Beautiful trade, by the way. If we hit our target, by the way, the first entry being here, second entry there. First entry, typically we want to go to target 1. So 54 pips on target 1. Second entry, typically we want to go to target 2. 54 pips on target 1, 48 pips, 54 and 48 will give us 100 and a little bit pips, right? 102 pips, whatever. So how would this trade pair up? It's hit the order block. We've identified that there's a channel in the area, and we see that there's been a breakout of the channel. We fibbed it, and we have our entry points. What happens next? Okay, so there we go. We're in on this trade. Okay. Oh, is it going to go to target? Oh, it's got target 1, but remember, trade 2, typically we're looking at target 2. If you got scared, you could have took profit there, 29 pips. Okay. If you're holding on, oh Lord, no. Oh, actually, you could be saying, oh, why didn't I take profit? This is the psychological aspect of trading. I should have took profit when I was in profit. Now I'm in a loss, right? Oh Lord, we're right back in a loss now. This entry hasn't been triggered yet. This entry hasn't been triggered. Ooh, now it's been triggered. Now, in that time period, let's talk about psychology. In that time period, you could have been saying, well, actually, I don't want to come all the way down here. You know, I'm in a drawdown now because I got in over here. Now I'm in a drawdown. I'm going to cancel out this second order because I don't want to be in a drawdown with 2 trades. This is psychology. Psychology is 90% of trading, okay? And that can cause us to falter in our trading activity. It's why you have to have a plan and stick to your plan, come what may. And as we wander across to see what happened in this beautiful trade, where it took us, oh, it went back up. So we're in with both entries. We're in with entry number 1, and we're in with entry number 2. Okay, let's see what happens. Bear in mind, it's come off this order block. Bear in mind, we broke out 1, 2. This is the 3rd day now. Okay. Oh, target 1. So now target 1, that's a profit take because we've gone from here to here, 53 pips. That's a profit take on that. We'll talk. Oh, gee. Will target 2 get hit? Target 2 is being hit, and that's on the second. That's now 47. So 100 and plus pips made on this trade. Just a beautiful trade. ICT, credit due, order block trade strategy on the Canadian dollar versus the Swiss franc, sorry. And just a beautiful trade, both targets being hit. Guys, hope you enjoyed the video. Not going to stay long. Be sure to subscribe, share, comment. Perhaps there's a currency pair that you would like to look at. And remember, always trade with a plan. thanks for watching, guys, and be sure to join us for more trades and our Telegram group and so on. And look out for our next video. Speak to you soon.